Every day I meet with international entrepreneurs and help them decide how to expand their business to the US. Should they use an LLC? Should they use a corporation? And in this video, I'm going to give you 3 examples of when you should have a corporation or an LLC taxed as a corporation instead of the transparent LLC, and how that kind of works, and then how also, as a bonus, how we can minimize the tax impact of that as you're growing your business. So to first give you some more context, I'm an international tax consultant. If you're new here, then welcome to the channel. But I'm working mostly with international entrepreneurs and helping them get their companies and their bank accounts and all that stuff set up. And this is a conversation I have all the time. And there's a big difference between an LLC and a corporation. A corporation pays corporate income tax in the US. It's a US person. It pays taxes at 21% federal income tax. An LLC is what we commonly recommend to clients because it ultimately is transparent to begin with. And for our clients that live outside the US, if they're providing a service, they don't have to pay income tax in the US. Oftentimes with e-commerce or with SaaS or with coaching, there's still no taxes in the US if you're using an LLC, so it gives you a ton of flexibility. Additionally, if you decide to expand to the US or satisfy one of the 3 examples that I'm going to go through in this video, this LLC can make an election to be taxed as a corporation. I often recommend clients use an LLC with a corporate tax election instead of just a straight up corporation for 2 reasons really. The first reason is because the governance and the requirements of an LLC is less than a corp. You don't need a board of directors. You don't need to have annual meeting minutes. You don't have to really do anything with an LLC. You just open it, you get your EIN, you get your operating agreement, and you operate and you work. The corporation has a lot more going on, and it's a little less safe, and it's just like there's more complexity to it. If you're going to open a publicly traded company, you probably need a corp. And the second reason to have an LLC with a corporate tax election is that you can revoke the election in the future if you make it timely and you do it correctly. So maybe right now you want to be a corporate tax as a corp and paying your 21% corporate income tax plus whatever state tax may apply. But maybe in the future you want it to be a transparent entity that isn't subject to income taxes. So you have that flexibility when you open a LLC instead of a corporation. Scenario number 1, when you would actually want a corporation instead of an LLC, would be investing in US real estate. If you have a single property, then maybe you can own an LLC in your own name and pay your own personal income tax, a 1040 NR, to report your income and expenses personally in the US. For most of my clients, they don't just have one property, they have multiple properties. And what we'll set up, and I have this in other videos in great detail. I did one like 2 weeks ago that was really good. We set up a Wyoming holding company that owns individual LLCs that own the properties. That Wyoming holding company files a corporate income tax return, and then that reports everything. Instead of having to file all these crazy reports and crazy returns, you have one main corporate income tax return and you manage it from there. So real estate is physically located in the US, which would make it taxed in the US. So when something's taxed in the US, we use these corporations or an LLC tax as a corp. I'm going to say corporation, even though I'm implying it's also an LLC tax as a corporation. That these corporations are really for putting all of your US activity inside of a box and letting that box pay its own taxes, do its own things. You need to treat it as such. You need to formally pay yourself. You need to formally make contributions. There's certain things you have to do a little more formally. But it really helps avoid double taxation. Do I pay in my home country? Do I pay here? Where do I report everything? You just report it here and you own stock. Scenario number 2 is when you're opening a physical business in the US. Bobby Stevens is out here and he lives in Ireland, and he wants to open a hat store in the US. Specifically, he wants to open a hat store in Arizona because it's so sunny out there. People need to protect their heads when they have no hair, especially. They need to protect their heads from the sun. He's like, I'm gonna sell so many hats. He opens up a hat store, he rents a place, and he gets employees. He does all the stuff. It's gonna be easier for my friend Bobby to have an actual corporation here, because that way the corporation rents the place, the corporation registers to business in the state, the corporation pays the employees, the corporation pays the tax on the profits, and Bobby doesn't have to file any personal income tax returns in the US. He can take his dividends with reduced withholding because he has it from a treaty country. Maybe he wants to pay his other company for services rendered to his hat company. Maybe he wants to do something else. But if he has a physical business with actual employees and office space where he's actually selling hats or something in the US, that's when you would want a corporation. In almost every circumstance, if you're going to open a physical store we're going to open a corporation for that store. Now, that doesn't mean that Bobby doesn't have a separate LLC that he operates all online sales with. So maybe you want a separate LLC for online sales and then a separate corporation for in-person sales to run the store. This one maybe gets by, maybe loses money. All the money's made on the online store, the LLC that doesn't pay taxes, while Bobby, he's an Irish citizen, but he actually lives in Panama or Paraguay and pays no taxes, or Dubai or whatever. And so he's like, I'm going to pay no taxes, but I am going to have a hat store that's profitable and grows the brand, but it's not as profitable as my online store. So there's ways to like kind of mess around and kind of not pay a ton of taxes by being a subject to U.S. taxes, by shifting, by organizing, by structuring your stuff the right way. That's scenario number 2. Scenario number 3 of when I would recommend a corporation is when you have complex ownership or local tax issues. So let's have this other company I'm going to talk about. It's a guy in Brazil and a guy in New York, and they do this agency and they have all these assets and all this stuff. But because it's a foreign guy and a U.S. guy operating out of an LLC, is potentially complicated. They have some stuff in the U.S., they have some stuff here, some stuff there. If they use this corporation, they're able to run all the money through this corp. It's real legit. It's got all its bank accounts. You have a U.S. partner, foreign partner, and you don't have to look about withholding taxes. You don't have to deal with like any. It's all real formal, and it goes through this single company that pays taxes in the U.S. Let's say the guy's not from Brazil. Let's actually say he's from Germany. Great. And Germany has really strict rules about owning foreign companies. Well, Germany can own a U.S. corporation. It's not a problem because it's paying taxes in the U.S. And you need to have it like that. He can't own an LLC the same way because they're really strict about the tax rules over in Germany. So Hans is the German guy. He owns 50% of this corp. And then Reggie is my guy out in Miami, in Florida, and they have a sunglasses store, no, whatever, it doesn't matter what they're doing. They have some kind of business, but because one of the partners is located in the U.S., you can't have 2 partners owning an LLC and it not be taxable. And especially because, for a couple of reasons. First one is because Hans in Germany can't just have this disregarded entity. It makes taxes crazy in Germany. So he just has his corp, it pays taxes, he takes dividends, he's happy. The second reason is because if you have an LLC, there's withholding tax issues in the U.S. It's complicated as well. So that's like the second, or like the third reason of we would do a corporate election or open a corp instead of an LLC. Is if you have like complex tax ownership where you have a U.S. person, a foreign person. That's not to say every time there's a U.S. and a foreign person, you should open a corporation. But that's in an instance when it would happen, when you either have one of the partners who's in a really strict country for taxes and they want just to have a corporation, or when you have multiple partners and it just makes it easier to operate using a corporation than having to deal with the withholding taxes of the multi-member LLC. So in summary, and I'm glad I'm going to hit my target of under 10 minutes in this video. In summary, LLCs are great, but they're naturally transparent. If you own an LLC, you won't pay taxes in the U.S., depending on what you're doing, of course, but you will potentially pay taxes in your home country. There's 3 scenarios in which you would want to make a corporate tax election so your LLC actually pays taxes in the U.S. That would be potentially when you're investing in real estate, potentially when you have a physical business in the U.S., almost every time, actually. If you have a physical business, that's almost every time. The real estate, 80% of the time, maybe 70%. I like to do it simpler with that, but if you have one property, you might not want to do the song and dance with it. But definitely if you have a physical business and a storefront, you're a foreign person, you almost always want this corporate election. And then number 3 is when you have complex issues or when you have potential local tax issues that you want to avoid double taxation by having this physical activity. Because again, if when Robert was opening the hat store, if he didn't make a corporate election, he has to file personal income taxes as a non-resident and pay higher tax rates on all of this income that he has. And then the last example, there's tax withholding at 37% of the profits attributable to the German guy. That's really a double taxation nightmare. Hopefully this is helpful. Check out the next video I'm making on how to pull profits legally from your U.S. corporations or U.S. companies and not pay taxes on it. And if you need help setting any of this up or you want to speak with me directly, you can schedule a paid call or a call with me and the team on jamesbakercpa.com/schedule. Thanks for subscribing ahead of time. Comment if you have questions, and I'll see you on the next video.